2 years into the NDA government's rule, the Indian economy has been hailed as the fastest growing large economy on the planet. Its growth of about 7.5%, even surpassing China's by about 1%. This rapid pace of growth has been assiduously fostered by the central government. And to talk to us about the state of the Indian economy and further measures in the offing to speed up growth, we are joined by the Union Finance Minister, Mr. Arun Jaitley. First of all, let me thank you, Mr. Finance Minister, for taking time from your very busy schedule to be with us on All India Radio. Let's start with India's growth story. India has been lauded by the IMF and the World Bank, among others, as the fastest growing economy in the world. But its growth still lags potential. What is holding back the Indian economy from realizing its true potential?
You see, what is this growth based on? Today, the essence of India's growth is increased public investment. That is, we are spending a lot more as far as governments are concerned. So that in spending is bringing growth. There's a lot of confidence that the world has in Indian economy. So a record FDI is coming in. And that FDI as an investment is the starting point of a good investment. There is an increase in urban demand. And therefore you have vehicles selling more. You have other urban-centric products selling more. So the 7.5% odd growth rate is being brought about on the strength of these three positive factors. What is it that we can further do to increase it and realize our potential? I think the first important factor, which is beyond our control, is that the world starts growing faster. So if global tailwinds support us, then our ability to grow faster will be there. But that's something not in our control. The second important factor is that oil and commodity prices must remain at a moderate level. The present regime suits us because as net buyers, we are buying at a cheaper price and therefore we are saving a lot of money. The third important factor, I think, is that India's private sector has to get more active. They had overstressed themselves. There is a twin balance sheet problem between the private sector and the banks, and the ability of the banks to lend for growth itself has to increase. And I think that potential has to pick up. That's the third important factor. And the fourth factor, I think, is that after two bad monsoons, we must have a good monsoon this year. Now, as each one of those four start turning around in our favor, I think their ability to contribute, and of course there's a fifth factor, that to keep our credibility, we must keep the reform process on. And the GST has become a testing proposition as far as the reform process is concerned.
India has moved up the global rankings in ease of doing business, but some feel more needs to be done. Which are the areas you believe that more progress is needed?
I'll tell you, the areas, some of the reforms last year about ease of entry into business, I think brought us up some 12 points. This year, those reforms have continued. Taxation has become more reasonable, and therefore we'll move up. The bankruptcy law will bring us a lot of upward movement as far as ease of doing business is concerned. So I'm extremely confident that having moved up 12 positions last year, we'll move up again this year as far as the World Bank ranking is concerned. But then let us remember there are some areas which pull us down in that ease of ranking. And the most important area which pulls us down is construction, building and real estate. We are rated as one of the poorest in the world. And that is because to get land, then to get plans sanctioned, to put up structures, to put them up fast, to avoid corruption in those areas, and then get completion and occupancy certificate. All this in India continues to be a nightmare. And this is a reform which has to take place at the level of states and the local bodies. In fact, out of the 189 countries in the world, India ranks upwards of 180. So we are amongst the worst in the world. And if we improve in this one area, it will significantly help us in improving our rankings. You see, you can have a very liberal FDI policy. You can have an easy entry into business. You can have a reasonable taxation regime. But then if it takes you 8 years to set up a factory or a plant, all that goes down the drain. So that's an area where states need to reform.
Job creation is a central objective of the government. Now, these jobs have to come from the manufacturing sector. Now, the government has taken a number of steps to lift manufacturing activity, but results are not being adequately reflected in macroeconomic numbers.
As far as the manufacturing sector is concerned, to concentrate on 27 sectors as a part of the Make in India, I think we have a lot of jobs being created in startups, in IT, in telecom, in a lot of services we have jobs being created. But mass jobs are always created in manufacturing. And there are sectors of manufacturing, particularly textile and clothing, which is a job creating sector. And I think this is one sector where we need to concentrate on, and therefore we must follow the norms of management labor arrangements in these sectors, because the principal object is to improve upon the number of jobs. That helps the country, that helps the working class. And more particularly in clothing, it helps women workers.
The government has done a great deal to cut wasteful subsidies through the direct benefit transfer and most lately by fixing an income ceiling for availing LPG subsidy. Is the government envisaging any further measures to cut subsidies?
We are not cutting subsidies, we are rationalizing them. You see, subsidies must reach the vulnerable. They must only reach the poor. That's the objective of the government. And therefore in LPG we've successfully implemented it. And I think the next stage is that we are trying in other areas like fertilizer and food, pilot schemes, whether similar schemes are possible or not.
The view has been expressed that consolidation is essential in the banking sector. How do you see this consolidation process unfolding and the government's role in it?
I think this is the year of consolidation, and the first major steps are going to be taken over the next few days.
You mentioned the GST bill. For 2 years now, a section of the opposition has been doggedly opposing passage of this bill.
Not a section of the opposition, only one political party, the Congress. And that's a political opposition, that's not an ideological opposition. I am trying my best to talk to them so that they can come around. And if they don't, then we'll have no option but to put it to vote in the next session.
What are the basic objections of the Congress party?
You see, they want a cap also the maximum amount of tax in the constitution itself. Now, caps are never fixed in the constitution. Tariffs are not decided in the constitution, they are decided in schedules or by the committees.
Is this an economic objection or is there a political motive behind this?
I believe these are political objections because they were not a part of the bill that the Congress party themselves had introduced in Parliament.
As Finance Minister, would you say that your most challenging task in the past 2 years has been to raise resources to boost economic activity while at the same time ensuring that the economy stays on the path of fiscal consolidation?
I think the main challenge of the Finance Minister is not to tax more, but to spend more. And for that, within the existing tax base, you have to improve upon buoyancies.
If you were to mention 3 chief initiatives of the Finance Ministry over the past 2 years, which ones would they be?
I think liberalizing the economy, removing discretions, removing wasteful subsidies, bankruptcy, concentrating and reviving India's infrastructure, and concentrating on the rural areas.
Let's talk about disinvestment, sir. The proceeds from disinvestment fell somewhat short of the target in the last fiscal. Do you see the target being achieved in this fiscal?
It depends on the state of the markets.
And are you confident that the market will?
If the markets are choppy and very volatile, and some of the metal stocks were low, there was no point selling the metal company shares. And therefore we tactically revised our target last year. We'll watch the markets this year, and hopefully the markets, if they are good, I think will be close to the target.
On the international front, sir, the US Central Bank, which the world is watching, is expected to start raising interest rates later this year. Do you expect this to adversely affect fund flows?
I think we have reasonable firewalls around the Indian economy that we can withstand such challenges.
Would you like to mention the major firewalls that the government has erected?
I think the biggest firewall is the strength of our own economy. When interests are raised in the US, the normal tendency of investors is to move towards a safer market, which is the US. But if India is at that time rated as the fastest growing economy, people are not going to desert your economy and look for safer zones elsewhere. Then you are one of the safest zones yourself.
So you're not worried about any significant devaluation of the Indian currency after a rate hike?
The currency has to find its range in the market on its own strength. The RBI has a very nominal role to make sure that a free fall doesn't take place.
Global crude oil prices have started moving up in recent weeks. They've gone from about $20 a barrel to about $45 a barrel. Do you foresee any risk to the fiscal consolidation process from this rising trend?
I think the present level of prices and the range it is expected to be in is something which we can afford. Extraordinary rise in prices is something that adversely affects us.
Back home, the government has taken a number of initiatives, launched a number of insurance and pension schemes for the poor and the unorganized sector. They have been widely acclaimed, but is the government planning any further measures to further popularize these schemes?
I think we've got millions and millions of people in these people, and these schemes will continue. This year we are adding a health scheme, we are adding a crop insurance scheme, and therefore the whole package of social security is significantly expanding.
Well, once again, thank you very much, Mr. Finance Minister, for being with us here on All India Radio.
Thank you very much.